Good morning, everyone. Welcome to this panel discussion on claims and technology. And we have a very distinguished panel. We have, Sundar Krishnan, Chief Risk Officer of Reliance Nippon Life. We have, the Nitin Mehta, Chief Customer Officer of Bharti AXA Life. We have Dr. Nayan Shah, who's the founder, CMD of Paramount TPA. And we have Rajan Kottadi, who's the founder of Stacey Blockchain Specialist Company. Okay. So welcome all of you. So let me set the ball rolling. This focus of this discussion is going to be on technology and claims in India. Life, health, and motor probably have the maximum touch points with the retail and the maximum complexity, velocity. So we have a good mix from that perspective. To begin with, I will request Sundar Krishnan and Nitin to articulate from a business perspective, for life insurance companies, what are the business challenges and pressures from the claim perspective? I would request each of you to throw light on that.
Yeah, thanks. Good morning, and thank you for the invitation. As you may know, I'm from the life insurance industry. So one of the important challenges, of course, having an high settlement ratio. Most of the companies have reached 98, 99 settlement ratio, which means that we can repudiate very little claims. But on the other hand, that there are claim frauds, and frauds are high in the insurance industry. So there is a challenge to restrict. So you can either prevent frauds, you can control frauds, you can mitigate frauds. And these come in all layers, and all layers are important. You should prevent frauds, you should mitigate, you should restrict, you should control. So, and of course, technology plays a very important role. And so the important challenges, and the other challenge is Section 45, which says that no claim can be repudiated after 3 years, even on a fraud. Earlier, we used to have that leeway. So given these challenges, regulatory, legal, social, you're bound in a certain window where you have to process new business faster, almost real time. You have to do underwriting almost real time. You will have to do claims processing real time, and which is the demands of the society in terms of the digital era that we are in. But of course, you take time. You have 7 days, 6 days, 3 days, depending on TAT and depending on the nature of the claim. And so you will have to play within that and restrict your investigations as much as possible on fraud. So that's the challenge, first challenge, processing on time, digitalization, and ensuring a high settlement ratio versus also ensuring there are no frauds. You detect frauds, you analyze frauds, you save time, you ensure that the customer is served. So these are the challenges you have to do: servicing, settlement, again, disposal of claim, and analysis and identification of frauds, analysis and identification of bad business. So the challenge is to weed out bad business, go for quality business, go for a good, robust book, have a very good parameter in place, ensure that you're in the top of the curve in terms of early claim settlement, in terms of speedier service to the customers, in terms of efficiency of the book. When we may say efficiency of the book, you're talking about having lesser cancellations, lesser free-look cancellations, lesser surrenders, lesser claim rejections. So you should put in the controls beforehand. So we used to run an analytics, which is called PIRV, post-issuance risk verification, using SAS to find out probability of the claim. And so we gave this analytic to our underwriting after some 2-3 years, so that they use it beforehand now. And from post-issuance, we've now got into pre-issuance stages. So we've risen there. But nevertheless, we still do some kind of investigations, even afterwards, and try and plug out frauds. So we will minimize frauds as much as possible. At the same time, we ensure better disposition of claims. This is in the life part. Of course, there are other challenges in the health insurance, which also we have health products. And of course, the health products of the insurance industry, general insurance, is very different, faster and longer.
I think it's largely in claims, it's largely about information. information about the medical data of a client, financial information about the client. When I onboard typically, and then all companies, and Sundar was mentioning that point about faster processing. One of the ways you could do faster processing is by getting higher non-met limits so that the case doesn't go to the underwriter. And then it's actually left to the discretion of the intermediary who's typically filling the form. And in India, unfortunately, still the customer does not fill the full form, and it's intermediary who fills the form. And without realizing the repercussions of what is required to be disclosed, decides simply for the benefit of getting the policy issued in real time, may actually not disclose certain important information, which gets picked up at the time of claim. And so, when the claim comes, there are two issues which we face. One is, of course, the investigation. For all early claims, investigation is mandatory, and then collecting evidence to find out if anything was wrong at the time of onboarding. And then I think the industry also at a large also has this moral challenge of rejecting a claim should they find an information which is adverse at the time of claim settlement, which in my mind should not happen. Ideally, there should not be a case of a claim repudiation simply because that you found an information which is adverse after 2 years or 1 year of the policy being onboarded. It is on us as insurers to find out everything possible. And which is why I think centralized databases like NDHM, etc., maybe over a period of time, if given access to, will help solve this problem of information asymmetry, which still exists, as a result of which the claims are not settled. Not every claim is settled, and the industry is still, let's say, on an aggregate level at about 94-95% claim settlement. 5% claims are technically rejected. So that, I think, to my mind, are some of the bigger challenges that at least life insurers are facing.
I'll move to Dr. Shah. Health claims being one of the most complex and volume also. The whole industry handles about 8 million inpatient claims per annum. So that's a very complex one in my assessment relative to other lines also. Because motor is also handled by so many different surveyors. Life, probably the claims will be lesser. So I think the biggest load in claims in India from a customer satisfaction point will be health. So how are you handling it, and what's your perspective, and what are the challenges?
First of all, thank you, organizers, for asking me to be present on this panel discussion. And I'm sure the audience would get what they want. In India, for health claims, when we started TPA, we were told that there were only 4 public sector companies. And whenever there was a medical claim or a hospitalization claim, people were saying that 3-4 mahine mein aa jayega. It will take 3-4 months for you to receive some acknowledgement or some contact from insurance companies. So we have started from that era. Then, you youngsters may not really know all this, but your parents, if they were covered by Mediclaim, they would tell you all this. That in those days, to get a medical claim reimbursed was a huge challenge. Simply because in those days, there were no medical people in the insurance industry. In insurance industry, they started this insurance for cattle or animals, and they hired veterinary doctors. But health insurance was not popular. So no medical doctor was introduced that time. Today, the scenario is different. We will touch nearly 50% of overall general insurance premium as health insurance premium. And the consumers also have become aware. Technology has grown. So today people want to know what will happen to their claims immediately. As soon, or even before getting into the hospital, they want to know whether they will get their claim or not. And this is where the cashless services are in fashion. And people go to the hospital where they get it done cashless, so they don't have to bother about reimbursement or settlement of claim. Those who go to some hospitals which are not part of network still want to know, and they want to have their reimbursement fast. Now with technology coming in, and when we are in digital era and digital health is being talked about, it needs to be kind of done within a particular TAT. Today, for example, for pre-authorization for cashless, originally we were taking 6 hours to give a cashless service. But with advances in technology and better softwares and better things, we also give instant downloadable cashless service. So that the system decides that, okay, he has sum assured available. This is the ailment which is requested is not under exclusion, and it is customary and reasonable charge. Just go ahead and give. So technology has improved a lot of stuff, and it is going to improve even more. In reimbursement claims, with technology coming in like OCRs and RPA and AI and ML, we will see that the manual data entry, which is happening today, will get eliminated over a period of time.
Okay.
And it would be probably 1 or 2 medical doctors which will just check whether the ailment is covered, not covered, somebody is not trying to do frauds, etc. And in this also, we have triggers for fraud. So one of the companies which has recently started new and started selling a lot of health products online came to us last month saying that they are having every second claim which was sold online and which was in the age group of 30 to 50 was a fraud.
Okay.
And they had investigated all these cases. How would you pick them up, or how would you suspect that? So we will see some newer challenges when we start using different technologies.
Okay.
See, in reimbursement case, I would easily know that this paper is a Xerox copy, or this paper has been manufactured or printed in a different way, etc., etc. In digital filing of the claim, we will have to look at different algorithms and different things. But the good news is that technologies are available. To give an example, in this Ayushman Bharat, which is even government hospitals and private hospitals are combined, we see the same X-ray for a claim which is done every second fortnight. So this obviously is a fraud, but somebody has to pick up that this is the same X-ray. And this is where the technology helps, because a human person may not remember, or it could be a different person who has not seen that X-ray. So when it goes through the scanning and through some algorithms, it will be picked up, and obviously this will be classified as fraud. So in health claims, this is very, very crucial and important. Another thing to remember, Arjun, is that we still have only indoor hospitalization product.
True, exactly.
The moment you get comprehensive coverage where outpatient is going to be covered, you will have flood of claims, or volume will increase drastically. Because on an average, a family, a person goes at least 5 to 6 times to a general practitioners. But once in 6 years, they get admitted. I mean, these are the statistics. It may be different for each family, but these are the general statistics. So you can imagine it will increase by at least 25 folds. And then how technology has to be used will become very important.
You're right, on the OPD when it starts coming. So Rajan, you have heard the business challenges from life insurance and health insurance. So the whole industry is still not used blockchain. It's just, testing waters. So have you made a beginning in blockchain in this insurance industry in India or elsewhere? And what do you feel is probably the solution for some of these challenges? Of course, it's a vast area, but in a very short way, can you just throw light on this?
So Arjun, thank you for inviting me here. So, and thank you to the fellow panelists to give that insights to see that, what are the current challenges we have, both from the health as well as the life insurance standpoint. So I heard Sundar and Nayan talking about the current challenges in the health and life insurance. So we'll be putting it across on what is the potential benefit for you to go with the, for the life insurance. So currently, the basic challenge is today, the stakeholders are operating in silos. So there is multiple data points which are going on, which is not in sync. And the company is not in track on how the data is moving, right? And there is a lot of tremendous amount of frauds which happens in the claim process, right? And refund of unclaimed amount, as Sundar talked about, is a genuine concern as well, right? And traceability of relatives of death persons, right? So that also, I think in some of the vertical it is happening. So I think we have proposed to a few of the insurers to see that how we really can implement using a blockchain solution for this. Some of the potential benefit when you go with the blockchain, especially I will cover in two pieces. One is for the life insurance. It has a real-time data update from government, death registration departments, to hospitals, to insurance companies. When you try to create this consortium across hospitals as well as insurance companies and the governments who put the death certificate online, most of the governments today are digitally enabled, and it is no more manual is happening, at least. And from the government of India standpoint also, you have wonderful initiatives coming in to consolidate birth and death data directly, right? So savings from the early resolution of the claim is one other benefit for you to go with the blockchain. This will help you to lower your cost of interest on pending claims and related payments. The payments will be much more faster because you're doing something very proactive, not a reactive approach. As you get the claims, the person applying for it, the moment something happens at an end, when you are connected with the consortium of the government, the moment somebody updates the death records, you will be knowing about what is happening in real time across the consortium partners who are part of the network. And even regulatory will also have an oversight in terms of how things are moving as per that, right? Much faster coordination will happen across multiple investigative agency on the claim settlement. That is, I think this is at the larger scale I'm talking about. We are going it in a phased manner. We already have trying out with the POC here with one of the largest insurers, with the government as well, who is part of the consortium. But I think we need to, it's another 12, 24 months. We have to create that ecosystem, because creating an ecosystem, bringing all the insurers onto the table to see that how the data, without compromising on the security, and what is the level of data you would be sharing with your partners is more important here. So that is making bit slow on the progress. But eventually people now understand, at least from 18 months and now, I could see a tremendous amount of transformation happening. And now people understand, at least at the top level, know that what is why we need to implement blockchain as a technology, right? And we heard on the security concerns, how the hacking was happening. So we heard that in every 2 inch claims, we were having frauds which is happening, right? So this definitely can be avoided when you connect your systems across to all your partners quite seamlessly in a very cost-effective way, having a separate ledger built in. So we were talking about some X-ray claims, right? So there is a lot of frauds which is happening. So we did one thing in the US region to bring in all the medical devices coming in as part of the blockchain network. So this is a live network which goes on when there is I'm talking about very high ticket, say that MRI scans, which cost much more higher than a normal X-ray, right? So that has a inbuilt system to connect to the network. So that you will have a live feed data which would be coming in, and you will not be having any kind of frauds which happens in that area. And each of these transactions, whenever you're going to put, and hospital is going to put a transaction, this is all in real time, and nobody can tamper with the records, and you will have a complete historical proof of it. And you will also have the entire timestamp associated with it. You will have a complete historical trail starting from the time somebody got admitted into the hospital to the time the claim process will happen after they go with, right? So I'm talking both with respect to that. So what is the benefit of it? It brings you a lot of improved experience for all the partners. So consortium collaboration is quite important here. A single global entity for updating the global ledger is what is the ultimate truth, where we need to bring all these partners to make this successful, right? That is one aspect of it. And coming to this life insurance, right? In combination with this, automated underwriting is one other thing which can be done on a blockchain network, because you can analyze the risk, You can do all this through something called as a smart contract, which takes care of. You don't have to define it. It will be predefined based on the contracts. Okay. All your TPAs, which are part of the network, there's tremendous amount of cost savings which happens. But I cannot tell you on how much, because the implementation is still not happening to that extent of what we are thinking about. But once we have a substantial partner network built, so probably it is a multi-party game. It is not an ROI which can be calculated at the company level, because you have a lot of consortium partners who comes. And one more thing is, we can bring in the reward systems. We can reward the members who engage in healthy behaviors, such as data from exercise trackers you can bring in. So I think most of the things is already happening.
You can do it through blockchain, probably.
Right. We can do through blockchain, so that you have a trust and transparency, and you will not have a fake data coming in. So because when you have an IoT-enabled devices, you will have multiple alerts which keeps coming in. In that, you have a lot of false positives as well. So again, reprice of policies to provide other financial or non-financial rewards based on the current health information is one other thing which we can explore. And all this happens fully automatically, a claims process with a disclosure and agent information of other transaction will be put in. And from the health insurance standpoint, we can leverage the information on the blockchain to help members manage their health and provide wellness rewards. So today, how we go with the wellness reward? So today, the government, just in the last budget, we have the CBDC coming in. So using these analytics and navigators to assist members in deciding what insurance plan would be the best to meet their current health needs can be calibrated through a blockchain network. So identify and close the patient care gaps. And this is one thing which we can do on the blockchain. And we can also help to gain greater understanding of value-based care arrangement. So that can be also put on the blockchain network. I think it will go in phases and to build a consortium to understand about what are the pieces which we can add onto the blockchain network. So that is holistically, Ashok. So that is my take on how we really can, each of the insurers can benefit both from the health insurance and from the life insurance and claim process in other general insurance as well. It's all working out well, actually.
Thank you. Right. Sundar, when we talk about claims, the fraud keeps coming as two sides of the same coin. So in this area, what are the kind of key technology initiatives that you have undertaken in your organization?
Yeah, so I used to, the claims head to report to me about 7 years back.
Okay.
And I used to see daily patterns in the data in terms of the area that the claim is coming from. We had some bad locations, especially life, taking life insurance to maximum limit. Then there was, which means business, disclosure of business in the proposal form. We also had some patterns in terms of the combo of policies taken or what kind of policies they adopt. Then there was some pattern in the products and the distributors also, depending on what kind of distributors you have. So based on this, I had intuitively, of course, looking at the data every day, I had 8-9 patterns ready. So my challenge was, just getting claims and then we're trying to repudiate them. And the repudiation ratio is going up. We have a good claim settlement ratio. So I said, what are we doing? We're just getting claims, we're rejecting it. And I see a pattern in that. Upper age. So you would have an 85-year-old being shown as 65-year. So that again was a problem. Then dead man insurance. Guy is already dead, the person is already dead and being insured. So these were patterns. And I said, this is not, and I saw the same thing again and again. So I said, let's investigate beforehand. And if the policy is a fraud, cancel it. Because you have a clause in the insurance policy document which clearly says it's known that customer has given fraudulent information. Of course, fraudulent information, you can cancel the policy. And of course, I had lots of challenges internally first. Nobody was saying that how can you cancel a policy later? What did you issue? What is the reputation on the underwriting, etc., etc., etc. Then of course I reached out to the regulator. Regulator said you must do it because things are changing, Sundar. And at that time, Section 45 hadn't come in. I said, there are even regulatory changes. And what you are saying makes sense. Go and investigate and cancel the policy and catch these fraudsters. So they were totally favoring me. The CEO was totally supportive. He said, no, Sundar, I'd agree with you. We can't be just... And of course, my actuals were actual against the estimation was very high. 300% in some areas, some products, 200% in some areas for some products, 150%, 160%. That was the burning ratios we had when we say estimate by actual, and actual was over the estimate. So when we adopted this 9-8 combos that I saw intuitively, it worked. I used to spend about 60 lakhs in investigation and save about 40 crores per year. This for 2 years. And then I said, what are we doing? Why don't we use analytics for that? So we had SaaS analytics for sales agnostics. So I reached out to the SaaS team and said, why don't you do something for me in the claims? Luckily, so it's not my investment on SaaS, but they were ready. So we did a 6 months back testing. And they, instead of 8 or 9 parameters that I had reached out or I had predicted, they came out with 36 variables based on combos and 6 months back testing. And we use Rational Suite and E-Miner, and then we were able to do predictive analysis. We had 3 categories, red, amber, and green. Red being the high probability of fraud. So that we used to cancel straight. Those were dead man insurance, and upper age 85 being insured as 65. Very, very outside the product parameters and underwriting parameters. So we could straight away cancel that. Then we had some gray categories where we know it's a fraud, but we wanted to give chance to the sales guys. So then you go and find out the real truth from customers and come back. Just 1% of the population came back, 1 or even less than 1. 99.5% didn't come back. We were able to cancel. And then there was a green category we didn't cancel. We said, let's watch this. So this produced tremendous results, and I could get some more savings in the next 2 years, more than 10 crores at least, using SaaS. Today, we are in the top. My early claim ratio is quite low, 11%. So it's about 10 to 13 or 10 to 14 is the top end quartile. So that's the kind of, early claim means a claim that comes in 2 years of policy or 3 years of the policy. So we were able to save a lot of money, a lot of cost. And I gave the software now to underwriting, and this was part of the underwriting engine now, where they run PRV and give us the cases much before. And so we don't do cancellation of policies now. Very, very rarely. We do still some investigations, and my fraud team does something. But those are more on data thefts, more ongoing frauds than the frauds that were there. And my actual, by estimation, is 70, 80%, 60%. Even in this COVID era, we had lesser COVID claims. But we did have our claims were quite high, but still far lesser than our companies. So data analytics and use blockchain in this. What happens again is the fraudster doesn't stick to one company. It goes to 3 companies or 4 companies or 5 companies. And if all the companies were to run together in a blockchain kind of system, and you get predictors or you get analytics, the whole industry can save money. We actually demonstrated to the board that how IAB data saved me crores. We were to demonstrate that, the bottom line, top line combo. So it is very useful. Analytics, artificial intelligence, machine learning, and use of blockchain systems to predict persistency, predict claims, predict behavior. Because it's all about data and behavior. At the end of the day, insurance is all about
behavior.
Yeah. As if you are able to run that effectively, you're able to save a lot of money. So, and also better service to the customer. And your respect from everybody because your settlement ratio is high. At the end of the day, regulator asking for a higher persistency, better claim settlement ratio, lesser complaints. And I've seen this. Data helps a lot. Analytics helps a lot. And if you have combo, because fraudsters are always attacking 3 or 4 companies or 5 companies. So if they were to combine together the data, which I've seen already when it was the IIB experience. People were to combine their data, it's a rich experience and you get good rewards.
So thank you for giving a very detailed technology overview of how we could solve the problem and add value. because that's what the audience will also be looking forward to understand how technology is being leveraged. So in the same spirit, Nitin, can you throw light on the technology initiatives that your organization has initiated and how it's impacting this?
So Arjun, I have the following take.
Okay.
When we looked at COVID and the claims largely triggered by COVID in the last 2 years, we had two revelations. One, that basis data and basis technology and basis analytics and cross-pollinating it with, let's say, data available from IIB, etc., you can only catch about 75-80% of the claims. The balance is not exactly an issue where technology can probably reach. There is enough data available for, let's say, your passbook, and IIB minus the LIC has access to policies which is sourced by all private insurers. And if you cross-pollinate and if you have a hybrid of data, you can come up with a profile which 101% is not a profile that you would like to onboard and you will reject. Or for the other combinations, you will actually have more stringent onboarding checks. You will do physical verification, etc., etc., or you will ask for medicals. But there is a big population which is still away from this. And we realize after looking at our data from COVID claims, we realize that which are these people and what is the medical condition of these people who are largely vulnerable to, let's say, COVID. And it was largely COVID which triggered this. We realize that people with, and our country is dealing with this challenge of diabetes. 80%, 70 to 80% of the COVID claims had people with comorbidities, whether it's diabetes or a combination of diabetes and hypertension. Now, unless there is a centralized data warehouse which is available, which tells you, or by the way, there are companies who looking at your face can also tell you that you are likely to be a diabetic or you have hypertension, etc. But there is no other way that I can find out whether this individual is diabetic or has any other comorbidity. And we started this as a pilot. We started through our data, we identified pockets where we were getting more diabetic policies. We started doing mandatory tele-MER. We started getting a doctor to call them and ask revealing questions. And we found that when a customer is talking to a doctor, as compared to a customer talking to an intermediary and giving information about his lifestyle, there was a big difference. And all of a sudden, I started getting revelations of over 25 to 30% over and above the application form. And as a result of which, I was able to find out, oh, this gentleman is a diabetic. And by the way, he did not disclose it. Now, the only issue is that technology is not able to get this information for me unless maybe Rajan comes to our rescue, or there are consortiums of databases, health, lifestyle, medical records, and they sit together and everybody at an industry level has an access to all this. I think will we be able to deal with this issue. But till then, I think with the balance 20%, which is still outside the ambit of technology, this a little conservative, but I would say an unconventional approach actually helped us.
Got it. I mean, thanks for bringing up this, because you brought out two very important points. One, the integration between, life and health insurance. I mean, usually we see this in separate silos, and good that in this panel we have Dr. Nayan Shah from health and your talk. And COVID brought about this because of the comorbidities angle, definitely, and the higher claims because of that. And the third one, what I liked about is, see, telehealth, which is, you don't see it as high technology, but it has got much more bigger impact than other technologies have added value. So, I mean, thanks for bringing it up, and the industry should leverage it more also. So, Dr. Shah, that extending what Nitin was telling, this importance for what repositories, maybe on fraud or on healthcare for underwriting and for a better pricing. What do you think is the situation now in looking at these integrations, and how can the industry move beyond this?
First of all, I will tell you a story which happened before 5 years.
Okay.
We live in Mumbai, and there is one area in Gujarat particularly which is supposed to be very claim prone or fraudulent, as insurers put it. So one of the general insurance company told us that, look, we are giving you this region to service, but there are a lot of frauds. So when we analyzed the data, we realized that at the time of underwriting, it is never done properly. For example, even if you want a credit card today, there'll be somebody who will knock your door and come and find out whether where you are staying, whether you have given the address is correct or not. So underwriting for life or health here in India typically is so backward. I mean, if you compare it with US, for example, Express, I mean, there are so many companies which are billion-dollar companies only on assistance for underwriting.
Yes.
Here, we then in that region, we sent our people, those who had given the those who had filled up the form, and we were given a timeline that because the agents wanted to know whether the insurance company is accepting the risk or not. So we had to finish that in 2-3 days. And we saw that in 40% of the proposal forms, the address given was of agent. When we also visited their house or wherever the doctors or GP's declaration was to be taken, nobody ever contacted GP. So there was one GP who was continuously giving the same thing for every client. When we went to visit their house, we saw that the family was staying in one-room kitchen, and the guy had gone for 10 lakhs insurance economically, which was probably much larger over insurance. So probably they were expecting some claim. Now, collating all these experiences today, if one needs to change the fraud level or proper data coming in, there are a number of things which can be done. At the underwriting level, why don't we ask all the data related to health and digitize them? Today, with technology, we can digitize that. Okay, these guys have undergone health checkup previously, and this has been there. You pick up 5 or 10 or 20 conditions and check out whether it is there or not. Okay. Like hypertension or blood sugar levels or thyroid levels or whatever is important for life or health industry. And all this data can be done, can be judged properly with help of technology in a much better way. Okay. So, if we are talking of any other kinds of frauds, economic fraud or this or that, that also can be done. Today, the KYC, is it really done? So most of the time it is done at the time of claim, not at the time of issuance of assurance of a certain amount of money.
So in that regard, probably the same customer comes from life, he comes from health also. So it's time to move from doing KYC for each transaction and doing it in a more integrated way, in a cooperative way. Right?
Agreed. So today with blockchain, one can have Aadhaar card details for every claim. But here what happens is that every TPA, every insurance company at the time of claim is asking for Aadhaar card or PAN card or this or that. All this can be eliminated.
So we find that technology is not really the showstopper. It is our, we are determined to work on silos, and even as life is working separately, health is working separately, and within the industry, everyone is working separately. So probably after this conference, I think we should make a resolve to work together within the industry and across the industry probably.
I agree with you, Arjun. Yeah.
So Rajan, we just got another 2-3 minutes, and I would request you to have the last word on it, and including that, budget has talked about CBDC. I mean, can we think about, the CBDC becoming as important as UPI, at least in insurance related transactions? How do you foresee what is going to pan out?
Yeah, definitely. So I think I just was hearing to Nayan sir and Nitin, and I think wonderful insights on the KYC, on how exactly we really can cross collaborate with multiple companies to have cost savings on this KYC data to be coming in. And also one more thing is the address which is being put across. So how exactly we can link this to the KYC data, which we already having it, instead of a reactive approach, going and looking into that details, have a proactive approach so that the system will identify and give you a trigger point to see that how you really can eliminate all this, right?
Yeah.
So that is from that perspective. And coming back to the CBDC, I think it's quite new. I think only a couple of days back, it has been put across. Even government is not clear on how to go with, right?
Okay.
I think I'm sure it is around 12 to 24 months away to see some reality there, right? Because technology is quite big. There is a lot of other things which need to be understood, not from blockchain, on what blockchain this CBDC will be coming in, whether the government is going to come out with their own blockchain or the existing blockchain can be used, how the security can be managed, right? How the tokenization will be happening. But I believe that once that happens, every other thing will be tokenized. Okay, you see the lands will be tokenized, and today the challenge is with the regulatory to see that whether today you cannot really go with. So, but once we have this in place, we can see tremendous value. It will be as big as UPI, in fact, more than that, because you have several use cases in many industries for you to go with tokenization in the supply chain, in the insurance sector, in realty, and all this will happen. So I think it is there. It will definitely add value, but at this point of time, it is too early for me to comment on how exactly it will trend. So the Stezi platform offers it's a do-it-yourself blockchain, where you don't have to have developers involved in creating a solution. So because this is a low-code, no-code blockchain platform, which helps industry to adopt it, we are creating a sandbox solution, both for the insurance industry as well as the financial industry. So you can leverage the sandbox, and we can start collaborating, and you can also create consortiums using this platform. So that means you don't have to coordinate too much on that.
Thank you.
Thank you.
Thank you. Goodbye.